Hey, good morning, everyone. Today is December 16th at 4:45 a.m. I'm getting up early for several reasons. One, to get in a better routine, and two, to watch these big percent gainers. So let's jump right in to small cap land here. Yesterday, we had AMCI as the biggest percent gainer. Absolutely incredible. New IPO in robotics, and with Tesla breaking out almost to all-time highs, making Elon a $600 billion man. Robotics is catching some heat too. So AMCI, a low float, 21 million shares play, have an insane volume yesterday, spiking up over 100%. And gapping up even more today. Just absolutely insane price action out of this one. Here's another one. VERO. And it actually had an earnings miss. I like to always start with the daily to see what the price history is. Look left, right? And here's another one, RILY. Lot of resistance on RILY. Let's see what the news is. Earnings beat on this one. Here's another decently low float. SQFT. Up a little over 15%. Nothing super interesting this morning as the overall market is rolling over. S&P 500 gapping up very nicely yesterday after a big sell-off and just sold off all day long. The NASDAQ looks even worse, actually closing below the 20-day moving average, which is a Gerald Peters pretty big sell signal. Let's see if I can get it to load. My Wi-Fi is out down here. And yeah, we're gapping down 3 points. Pretty clear double top here on the NASDAQ. Bonds are getting absolutely decimated. So whenever bonds go down, stocks should theoretically go down with it because bond yields are going up. We're sitting at 4.4% on the 20-year, which is historically pretty good, pretty high. We'll continue to watch it. Gold even taking a pause, being the biggest runner this year along with silver, and it looks like we're getting some consolidation in those markets as well. Yeah, but technology is really taking an ass whooping here, coming down a little bit. And, we need to consolidate and chill out on these gains. But I want to show you some interesting tweets. Here's one right here of Oracle. Oracle credit profile continues to worsen. The company's CDS spread, which is just the cost of insuring against default, has climbed 151 basis points, its highest level since 2009. Some believe this is a warning sign not just for Oracle, but the broader AI sector. Markets are now pricing in a probability of default of greater than 12%. 12% is still pretty low, and I'm not super scared yet because Larry has proven to be pretty spot on with tech. I mean, he owns an island in Hawaii, so I think he's doing okay. But yeah, a lot of information coming out on technology and that front. Now, another really important market I want to go over is Ethereum and Bitcoin. Bitcoin, last I checked, was sitting at 85,900. Let's check out what it's at now, okay? Bitcoin price 86,000. So we've got a little bit of a bounce since last night when I checked, but down 7% year to date, putting a lot of pressure on MicroStrategy and his digital money, digital capital big theme he's got going on here, where he's literally just issuing shares, raising money through the public market to go and buy more Bitcoin. And their stock has been getting absolutely decimated. So if Bitcoin gets any bit of a bounce, and all of you income seeking investors are watching MicroStrategy, MSTY is something you might want to watch and pay attention to. It is the Yield Max MicroStrategy fund. It's a way to create a little bit of income off of Bitcoin exposure. And some of his investment products, like Stretch being the supposed to be the least volatile play, getting some more selling pressure. They're trying to keep it around $100 a share. So yeah, we're watching. This could be the nail in the crypto coffin, MicroStrategy, and how much they have borrowed to buy Bitcoin. So yeah, and then I really like to look at the sectors. Let's run through the sectors really fast just to see what's going on. Consumer discretionary right before Christmas hitting all-time high. Real estate in a massive consolidation here. Utilities have come down quite a bit. Here's a really, really interesting chart that I'm watching. Consumer staples, okay? So this is a typical flight to safety, and it is going up. We did get a doji star here right at the breakout level. 5 days green in a row, but we have a ton of resistance up here in the 80s to 83 level. It's a channel that it made back from February to August/September that it could not break out of and failed. So we'll see what happens. Finance, JP Morgan, Goldman Sachs, they're getting all big bonuses this year. Incredible year for the finance sector. Consumer materials bouncing nicely. Communications bouncing decently. Healthcare being the biggest leader at the end of the year. Absolutely insane bounce going on right there in healthcare. Technology rolling over. Energy is another one that I'm really, really watching. I mean, with this AI craze and the way the world's going, I think we need a lot more energy, but we cannot break out of this channel made here. Let's zoom out a little more. Take a big picture view here on energy, and we've been in this same position since 2022. Okay, just in this channel between 38 and 48 for 1, 2, 3, going on 4 years now. Industrials doing well. So I'm really watching the real estate sector, which has come way down, and I'm watching energy and obviously consumer staples. I'm watching all of it, okay? A lot going on. Now, if we go to the individual companies, let's go to Oracle here. Where are we at, Oracle? I can just type in your ticker symbol if I really need to. There we go, Oracle. Absolutely decimated. I mean, what volatility, almost down almost 50% if it hits, 170-ish. 50% in a matter of 2-3 months. It's gotten this big of a price adjustment, which is absurd to me. Intel company, United States government took a big stake in Intel earlier this year. Nvidia could be rolling over. It's down below its 20-day moving average. Colgate, everybody got to brush their teeth, right? Well, it is just broken above its 20-day. So seems to me like we're rolling out of tech and into consumer staples. Nuclear, Honeywell turning quite a bit. United Health, Warren Buffett now in the money. I think his average price is either $3.25 or $3.35. Southern Electric getting a nice pullback. Walmart, I always think this is interesting. Walmart is trading at a 40 price to earnings ratio, and we have technology companies like Nvidia trading at 43, Oracle trading at, come on now, 34 now. Intel trading at Should have looked at this. Intel trading way up there. Yeah, so we have a grocery store now trading at what some of these technology companies are trading at, which is pretty interesting. Airbnb is something I want to highlight as well, getting a really, really big bounce. If you follow my monthly paycheck portfolio, I did buy some ABNY down here on this dip. Whoops. Down here on this dip in the 120s. When Airbnb was in 120, I bought a little bit of ABNY. Let's check out how big of a bounce ABNY is getting. Yeah. So all the yield back funds did a reverse split. They gave me cash back on my Moderna position, which pisses me off because now Moderna is bouncing nicely. So, yeah, they timed that ironically well. Anyways, have a good day, trading day. Stay disciplined. None of this is personal investment advice. It's just for informational purposes only. I have no clue what your financial goals are. I have no clue what your financial status is. So this is not advice. This is just for information. There's a significant risk in day trading. There's significant risk in investing. So just know that there's no guarantee. And from that, I started Fenwick Financial, based here in Kentucky. And yeah, I don't trade with client funds.